Most traders rely on candlesticks, indicators, and price action, but they're completely missing out on what actually moves the market. That's where volume profile comes in, and today I'm going to show you how institutions use it to dominate the game. By the end of this video, you'll know exactly how to use volume profile to find fair value, spot high probability trading setups, and avoid getting trapped like retail traders. So this is going to be the volume profile. Now, by definition, the volume profile is a vertical histogram showing volume at price, not volume over time. So you guys could see basically all of this is showing us all of the volume and how much volume was traded at a specific level. Now there's many different types of volume profiles that you could look at. This is one of my favorite types of volume profiles to look at because it is the easiest to look at and it is also the easiest to understand. Now within the volume profile itself, we also have three levels. We have the value areas, which are going to be our value area highs, our value area lows, and our VPOC, which is going to be the point of control. Now, at our value areas, this is where 70% of the day's trading volume is actually being traded and transacted at the value area high and the value area low. At our point of control, the point of control is where the most volume was actually traded on the day, which all of these levels act as magnets, which if you pause the video right now and you look at price action, you see how price action reacted around these levels, they act as really great areas of support and resistance over typical price action levels. And they also act as magnets when there's certain breakouts to either the up or the downside past the value area high or past the value area low. And really these are the best areas to look for breaks and retests to confirm a new trend. And what we can also do is monitor the previous value area highs, value area lows, and POCs to see if they're increasing over time or decreasing over time to really get a better picture of how strong a specific trend inside of the market is. Now, what you can also do as well is look at the POC. And if you see over the trading session, the POC has consistently shifted lower and lower, that is a key sign for you that the markets are currently in balance and you should be looking for potential opportunities to continue to short with that market and vice versa. If the VPOC shifting higher and higher, that is a sign for you to actually look to continue to take the market higher with the overall trend. What I want you guys to also notice is just really quick look at price action and look at how long price action hovered around this POC. And what I want you guys to also think about is this is currently a 5-minute time frame. This is not a range bar chart or a 1-minute time frame. This is a 5-minute time frame. So in between our value area highs and our value area lows, we actually have a little bit of a range. This is a 65 tick range to the upside and a 65 tick range to the downside. So for me, when I actually take positions on an intraday basis, I either take them at the POCs, looking for price action to push into either the value area high or the value area low, looking for a continuation. And I also look to take profit at the POC if I'm taking some form of a mean reversion trade where I'm looking for a move back up into the POC or back down into the POC, specifically when there's days in the markets that are very balanced. Now, what I want you guys to also look at as well is how long price action hovered around the POC. This is where the market actually deems this level to be fair value, meaning that both buyers and sellers are happy transacting inside of this area. And this gives us really great trading opportunities in the markets every single day. Now, what I also want you guys to take into consideration here are areas of high volume nodes and areas of low volume nodes. High volume nodes are just simply exactly what they sound. They're areas inside of the market where there was a lot of volume traded and there was a lot of volume being transacted, and low volume nodes are the complete opposite. Low volume nodes is typically after you see some form of a breakout in the market where there just really wasn't that much transacting and it's really just caused by a lot of either aggressive buying or aggressive selling. So what I want you guys to think about when it comes to high volume nodes is that there's a lot of buyers and sellers inside of that range. When it comes to low volume nodes, it's typically just going to be either a lot of aggressive buying or a lot of aggressive selling that's causing that breakout to the downside. Now, if we look at this previous trading day here, you could easily see where the high volume nodes and the low volume nodes are. You can identify that all of this is a high volume node, and you can even go a little bit further in depth and say, okay, well, you know what, this is a price range right here where we had a lot of volume being traded. Then this is also another price range over here where there's a lot of volume being traded here as well by around that value area high. And then of course, after we saw this big breakout to the downside, this is where we have a low volume node all the way over here. And then we also have another low volume node all the way over here as well. And then we have another high volume node inside of this range here where this POC actually was. So for me, one of my favorite trading setups is looking for pullbacks into high volume nodes and looking for either rejections or breaks above and retests for me to look to continue to take longs in this situation here and watching the price action around this area. So this is going to be the previous trading day's high volume node, and what you can see with price action is once we actually came down into this value area low, we pulled all the way back up into this high volume node and started to again transact here. If I was in a situation where we're seeing a lot of trapped sellers in this area and I'm looking for a move to the upside, this would be an area where I'd be looking to take that specific position, placing my stop loss under that high volume node, and then my take profit being the next level of resistance, or potentially even a low volume node or another high volume node here as well. They're going to act as really great areas of support and resistance. The most important support and resistance levels here are going to be these high volume nodes. Now, what you could also do as well, and what I also like to do, is when there's a short-term breakout inside of the market, what I would be looking for is after that breakout to the downside, I would be looking to identify where the low volume node is after that breakout. And if I identify this area to be the area that is the low volume node, then what I would do is wait for price action to pull back up into that low volume node, transact more inside of that area, and determine on a footprint chart who is the aggressor and is that aggressor getting rewarded. So in this situation here, if I see that there's a lot of aggressive buying in this area so far and we're not really seeing price action continue to push up, I may actually look to take shorts. Versus if we get into this area and I see there's a lot of aggressive sellers and we're starting to see price action continue to actually reject that area and go down, then I may put myself in a position where I'm going to be looking to take this area short. But again, it's very situational and it really depends because we're using the context clues of the footprint chart to confirm the entry, but more importantly, we're looking at not only the volume profile, levels such as the value areas and the point of control, but also the low volume nodes. And what you could do and what I like to do here as well is I like to combine these value area highs, point of controls with my high volume nodes and my low volume nodes to really give me the best confluence when it comes to taking a trade at a certain level. More importantly as well is you want to look and identify what the PO shifts inside of the market is currently doing. So if you see that the market opens up around the 53.41s and over the day the market is actually, or the point of control is actually continuing to shift lower and lower throughout the day, that typically is a very bearish sentiment. You want to continue to look to find areas where you could look to actually take shorts. Versus if the point of control is actually shifting higher and higher throughout the trading day, that could be a bullish sentiment. And this is an area, and this is a point in time where you should be looking to actually continue to take longs with that shift to the upside. And last but not least, what you also want to be doing as well is you want to be combining the volume profile with price action and also with your footprint charts as well. So I want you guys to think about the volume profile specifically being a map as to where you should be looking to take trades, where you could either look to enter trades or you could either look to take profit off of trades, and then using the price action and the footprint charts to actually confirm the entry itself and what type of trade you should be looking to take. Because there could be a lot of times in a situation like this where we have a lot of stacked buying imbalances that, yeah, you know what, I'm going to take the market long here above a break of the value area high. But then there could also be times where it's like, okay, you know what, above the value area high, we have a lot of trapped buyers and we're not seeing any reward for those buyers. And what that tells me is that we have a lot of passive sellers absorbing all of those aggressive market participants' orders. And then we could see a reversal back to the downside in that situation when the buying exhaustion actually does start to dry up. And when that aggressive buying does start to dry up, we will see that reversal. And then I really position myself from an area that's like, okay, well, my stops are going to go here. My take profit could be the value area high, it could be the point of control, or it could be a high volume node as well, and really move from there. The last thing that I also wanted to wrap up and touch up with you guys as well is that you can't just necessarily rely 100% on volume profile. Again, volume profile is basically showing us the map as to where the more important traders and the smart money traders are actually getting into the markets, accumulating their positions, showing us where the point of control of the day actually is, the value areas as well, showing us the high volume nodes and the low volume nodes, so we know what type of trade setups that we should be looking for. Again, if we see a big breakout to the upside, don't FOMO into a position. Look for price action to pull back into a low volume node, wait for price to transact in that area, and if buyers can continue to defend and support the market at that low volume node, then that's confirmation for you to take longs. But again, you have to tie this in with some form of a delta footprint chart, or at bare minimum with price action if you're not using any other order flow tools such as a footprint chart, such as a heat map, such as a DOM. You have to bare minimum tie this in with price action as well. Can you trade volume profile with just price action alone and be profitable? Yes, 100%. But the goal of trading specifically is how can I sharpen my edge as best as possible and gain an advantage over the 90% of other traders that we see inside of the markets. And again, that's using tools such as a volume profile, such as a footprint chart. And again, guys, if you guys want to get more information and you guys want to get my actual live trading recaps, you guys could join my Discord server 100% for free and review all of the trade recaps that I post in my Discord. I will leave a link in the description so you could watch how in real time I tie in my volume profile with my footprint charts to make the best trading decisions. And then also when it comes to one important thing, the POC and the point of control, it's not that you guys want to take trades directly at the POC, because you could see consolidation. You could see a lot of consolidation in this range. Again, you could use it to take trades at the POC, yes, but this is not something that I would prioritize every single day. The way I would be looking at taking trades off of the POC would be, okay, well, we know what we just broke under the POC. I want to see if price could pull back up into the POC, and if we can establish that we do have aggressive buying or aggressive selling inside of that area, where of course we do see actual passive participants holding the market lower in this situation here, where we're not allowing price action to continue to trade higher. So I'm going to be looking for passive sellers in this range, looking for price to dump back down into the value area. Or for me, my favorite way to trade around the POC is really to use it as a target for mean reversion trades, not necessarily pullbacks, because again, I'm looking for like different high volume nodes for price to pull back into those high volume nodes. So again, look for that rejection and that confirmation to move price away from that area. But again, it's all going to be a general range of support and resistance. If I were to be looking at this POC in this high volume node, this is how I would analyze the range to actually be in between these 53.23s and these 53.28s.